It is bloody out there, my friends. Crypto and the stock market is crashing. What will the Fed do? Will they continue the pain? They're meeting on Wednesday. I want to talk about, could we see a reversal, and much more. Also, the crypto industry is taking the brunt of this big crash, guys. We have layoffs coming from major crypto companies and exchanges. Also, Celsius has locked withdrawals and the ability to swap, guys. Not a good sign. Are they about to collapse? This would drive us down even further. Also, there's big updates with the Ripple SEC lawsuit, and Brad Garlinghouse even weighs in on this crypto bear market and what's happening, guys. Let's break it down. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you're new here, please hit that subscribe button. Also, hit the thumbs up button and leave a comment below. If you're listening on a podcast platform, please give me a 5-star rating. Quick word from our sponsor, and that is Link2, which makes private equity investment easy. Link2 is democratizing the process of equity investments. Previously, you had to be part of a VC or a hedge fund or a massive investment firm to be able to invest into crypto companies and other tech companies. Well, Link2 is bringing that opportunity to accredited investors. They provide opportunities to invest in companies such as Ripple, BitPay, Uphold, Abra, and many more. They continue to add to their list. So this is a great opportunity to double dip, just like the big hedge funds and VCs. You can buy the tokens, which I know many of you have, but also get shares, buy equity in the companies before they IPO. And Link2 and the customers at that time who invested in Coinbase before the IPO did very well. So there's an opportunity here, once again, my friends, to double dip and make money on both sides. So check out the link in the description. Go visit Link2's website and see if it's for you. Now, let's look at the market here. Bitcoin currently at $22,000, guys, just over. Ethereum just below $1,200. It is a sea of red. It is bloody. It's a bloodbath. It is painful. And I say that as someone who's been through bear markets before. I've been here since 2016. I saw the big crashes. I even saw the COVID crash, right, of March 2020, guys. And this is still painful because you see your portfolio value just tank. However, that's the short term. The long term and macro perspective, as I've often talked about, I am bullish. I see the market cycles playing out, and that is bull and bear. It is in the stock market, in real estate, in crypto. Now, crypto moves a bit faster. It's more volatile, but the volatility allows you to make more money in crypto, of course. So we have to be patient and go through the good and the bad times, because in the bad times, you get the opportunity to accumulate. And then when the price starts going up, you sell and make a profit, right? It's a tale as old as time, guys. It's just market cycles playing out. And you got to be able to separate your emotions. I'm not saying that it doesn't hurt. It doesn't sting. Of course it does. But sit back and know that markets move in cycles. Nothing goes up in a straight line forever. And right now we're seeing just brutal bloodbath here with Bitcoin and altcoins taking more of a bigger hit, of course. And look, everything's down, guys, including the stock market. The Bitcoin the Bitcoin fear and greed index is at an 8 right now, at extreme fear, guys. I don't think I've ever seen it that low, but I could be wrong. But still, anything below a 10, that is something to call home about. Like, okay, hit the alarm here, guys. And here, Bitcoin monthly RSI at the lowest level it's ever been. This has been reported by Matthew Hyland. It's just amazing. We're breaking some records here with the lows. I mean, it's records we don't want to break, but even further than what we saw in 2018. Here, Plan B, who I haven't really talked about much on this channel, he did a great chart comparing Bitcoin and the S&P 500. He said, everybody's looking at Celsius, and we're going to talk about them later, but do not forget to look at equity and bond markets. This is not just Celsius or crypto. Look at the stock market, guys. The stock market is also in pain right now. So everything is going down. This is like the great flush out, similar to what happened to the dot-com boom in the year 2000. massive wipeout. A lot of companies went under, but out of that came, we know the Amazons, the Googles, and the eBays, and many more, right? So there will be winners. And likewise in the crypto market, there's going to be a lot of altcoins that disappear, but there are going to be winners coming out of this. And this is why, we've talked over the years about how to select these projects and be careful with the hype coins versus the ones that are actually building, right, guys? So we're seeing pain across the board. We know that the stock market and crypto is highly correlated. So here's kind of a recap of this, the macro scenario. Stock market is down, Bitcoin is down, wage growth is flat, the price of rent, gas, food, and other stuff you need to survive is going up. It's skyrocketing, right? You want your assets skyrocketing, not the stuff you need to survive. So that's the environment we're in, guys. This is pretty severe because you had a recession looming, and if not already started, you have crazy inflation, crazy gas prices. You have the Russia-Ukraine situation. You have obviously the lingering COVID situation. So there's a lot happening here, but that's not to paint a doom and gloom forever. Like I said, you step back and you look at boom and bust cycles. You saw what happened in 1987. You saw what happened in year 2000, in 2008. What happened, guys? Did it crash forever? Were we in a depression, recession forever? Of course not. But that's the time, if you have dry powder, to buy at the dips and sit down and wait patiently for the market cycles to continue. Life will still go on. The markets will still go on, guys. So people often forget that. They get so caught up in what's happening in their portfolio right now, they miss the macro, where the big players make the money and make the big bets. So Sven Heinrich, who's a great trader, he's often on CNBC. He's been talking a lot about the Fed and what they're doing. So the Fed will be meeting on Wednesday, and there was a report came out today that the White House is watching the markets, of course, because this is a big problem. The Fed's been raising rates, and the markets have been taking a hit as a result. And right now, there's reports of a recession coming. So what will they do? Because they can't make this too painful. A lot of wealth is getting wiped out here. And I'm not even talking about you and I as retail investors. I'm talking about the big whales and the ones who do campaign donations, and the one who some would say run the world, right? The money that runs the world, those rich, wealthy people. They buy off politicians and so forth. I don't want to go down that road, but you guys know how this works, how money and politics work. So will they be able to handle that pain as well? I'm sure many of them, they know markets move in cycles, but it's how much of a drop, right? How bad is this thing going to be? So some of the things Sven called out is that the 10-year yield now exceeds the levels of 2018 that markets couldn't handle, then forcing the Fed to flip-flop on rate hikes and QT, which is quantitative tightening, cutting rates 3 times in 2019. Now, these 2018 levels are being exceeded with over $8 trillion in additional debt added in less than 4 years. Now, I know some of you are going to say, hey, why are we talking about the stock market and bonds and the 10-year yield and so forth? It's because crypto's correlated with it, guys. So it's important to understand what's happening here, and these macro factors are affecting crypto. And, he's been Sven has been saying that the Fed they don't have control anymore. This thing's out of control right now. So he says, if yields keep flying like this, the recession starts on Wednesday. And he even tweeted out, yields are the new shit coins, because they are bouncing up like never before, guys. And, he's saying here, they literally have to raise rates into a complete meltdown. Well done. So he's been roasting the hell out of Jerome Powell and the Fed, and the markets are taking a big hit, guys. And once again, it doesn't matter if you're in crypto or stocks, it is brutal out there, and we just got to hang in there. Today, I did buy the dip. This is not financial advice. Please don't go buy because you heard me buy. I want you to do your own research. I bought some Bitcoin, some ETH, not a lot, but I'm just accumulating. I'm waiting to see maybe where the bottom's going to be. Look, no one can call the top or the bottom, but you want to be in the zone, the range, right? I don't think anybody can perfectly time it unless you're like an algorithm or a bot set up to do it. So, it is a great buying opportunity. Once again, because we're in the lows, and that's when you want to buy, when there's blood on the streets, right? Be greedy when others are fearful, and fearful when others are greedy. So no one's greedy right now in a sense of the masses, the herd, right? People are very fearful and they're selling. Now, Eleanor Tourette of Fox Business did a really nice recap of what the hell is happening in the market here, and things that are really driving negative sentiment. Celsius Network, so Alex Mashinsky, freezes withdrawals due to extreme market conditions. That's not a good sign. And there are people saying it looks like Celsius may collapse. God, I hope not, because just imagine if that happens, guys. They're holding a ton of Bitcoin. I hope it doesn't happen. There's some people who want it to happen. And I'm like, look, you may not like certain people in this market, you may not like certain companies, but at this point, if this was to collapse, I don't even know what the bottom is going to be. It's going to be rough. But we have crypto companies doing layoffs. Crypto.com is laying off people. BlockFi is laying off people. Binance, their Bitcoin network withdrawals went down today, but they were back up now. And obviously, there's huge Fed and inflation concerns. So it's a lot of negative news out there. But once again, leave your emotions at the door and look at blood on the streets. That's a time to grab as much as you can if you have the dry powder, and if you're financially in that position. You want to be careful as well, because there is risk here, right? As with any investment, and I'm not just talking about crypto. If you go into stocks as well, right? We just don't know what the bottom is going to be, and we don't know what tomorrow holds. So there is risk. However, you want to look at probabilities. What's the likelihood of this dropping another 50%, right? Probably not likely. What's the likelihood of it dropping another 10%? Pretty likely, right? So you got to look at different things, and once again, it's about patience and going through these cycles. So Anthony Scaramucci, who I've interviewed on the channel a few times, he went on CNBC today, and he was talking about this, and he said they bought more Bitcoin. They bought the dip. So the whales, the institutions, are certainly buying, and that is, once again, how they've done it historically. The same story repeating in market cycles. Retail gets super scared. The media obviously covers this in a fearful perspective, and people get scared, like, oh no, I need to sell. No, you don't need to sell unless you're over leverage, or you're losing leverage, or using leverage, or you're using your mortgage money and your rent payment money, right? Then yeah, that's a bad mistake. But if you're using capital that you can afford to lose, or you can watch it go down and stay like that for another 6 months, then you're okay. It's going to go back up in the market cycles. Now, some motivation here and perspective. Rect Capital shared the following, and I absolutely agree with this because I live this. You survive the 84.5% drop in the Bitcoin in the bear market. I'm talking about 2018, 2019. You survive the 63% Bitcoin crash in March 2020. Many of you remember that. You survive the 53% Bitcoin crash in May 2021, last year, the summer crash, right? People were panicking. Bitcoin went back up, of course. Now, I'm not saying that's going to happen here. This is, I think, the bear market. We've hit our tops for the stock market and Bitcoin and altcoins. He said here, you'll survive this crash as well. Absolutely, guys. Zoom out, look at the market holistically. Now, Brad Garlinghouse, Ripple CEO, shares some thoughts, and I think they're very helpful. Obviously, he's been here a long time. He says, days like today are never what you hope to see, especially in an industry with as much incredible talent as crypto. If you recently joined the industry and haven't seen a downturn like this, know that this too shall pass. Advice from someone who's seen a few downturns over the years. It's never easy, but there are a few key reasons why Ripple has weathered the cyclical bear markets, as we will do here and continue growing. One, having an experienced executive team that has been through the dot-com bubble, 2008 financial crisis, 2018 crypto winter, and more. So see, guys, it's a matter of perspective and experience, right? Experience is a great teacher. Focusing on the long term, Ripple has been building enterprise products with long-term utility, not speculation. These are products that solve problems today, not ones in search of a problem. FYI, Q2 ODL volume well over $1 billion, already surpassed its target 3 weeks before EOQ, end of quarter. He says, operating with transparency as a holder of XRP, we believe communication and transparency, including our quarterly markets reports, are key to being a responsible stakeholder. We've been asking for regulatory clarity for years and being upfront about what is and isn't working. He says here, paying attention, what's happening now is not a small market gyration. We've been preparing for this with a significant cash balance and thus can afford to keep hiring the best talent with the goal of 50% outside the US. He says here, the market is likely going to shrink in the near term, but I and many others have every ounce of confidence that crypto will succeed in the future as an integral part of our global financial system. Slow and steady wins the race. So just like the 2000, the dot-com crash, did that kill dot-coms and tech companies? Of course not. Will this crash kill crypto? Of course not. Did the 2008 bubble pop in the real estate market kill real estate? Of course not. Was there pain in the short to midterm? Of course. Did it rebound and continue into future bull markets? It did, right? So once again, guys, zoom out and leave your emotions at the door. Here's something I thought Eric Voorhees of Shapeshift tweeted out, which I agree with him. He said, it's sad that 20% of BlockFi employees had to be laid off because the SEC stole $100 million from them when they did nothing wrong. So, there's the other part of that with the SEC, and obviously Ripple's feeling that, and they, I think, have to pay, I think Brad Garlinghouse mentioned there $100 million in legal fees. So the SEC is just going around shaking down companies, wasting people's time. And maybe BlockFi wouldn't have to lay off these people if they had that $100 million cash, cash bag, right? And they had to give it to Gary Gensler, Goldman Gary Gensler. And I wonder where that money's going, by the way. Stuart Alderati, he penned an article here in Fortune titled "The Speech That Muddied the Crypto Waters." So talking about Bill Hinman's speech, he said 4 years since the infamous Hinman speech, and we're nowhere closer on knowing how to classify digital assets in the US, keeping every crypto, including ETH, in regulatory limbo. I penned some thoughts for Fortune why enough is enough. So they continue to beat the drum, calling out the SEC and the hypocrisy, which I love. And this is why I cover this news, because this case, guys, is big. If Ripple wins this, as we've talked about, it will set the precedents, give the market the ammo to fight back the SEC. So we need Ripple to win. So, guys, Celsius, they tweeted out is that they're pausing all withdrawals, swap, and transfers between accounts. Acting in the interest of our community is our top priority. Our operations continue, and we will continue to share information with the community. This is not a good sign, and I hope, guys, there's not a collapse on the horizon here. Funny enough, Nexo, which is a competitor, when they saw this, they came out and said, and it was kind of in bad taste a little bit. They put out a public letter saying they would look to acquire Celsius. So maybe they know something we don't, but it was kind of in bad taste doing that. But guys, this worries me. And when I say worry, I mean in the short term, not in the long term, because I want Bitcoin to at least hold, certain price points, the altcoins to hold certain price points. But when you had the Terra Luna collapse and then you put Celsius on top of that, man, it's going to be really bad, right? Now, Ron Hemmen of the Blockchain Association, I'll be interviewing him again soon. He's a frequent guest on the show. He tweeted out, due to the ongoing market condition or situation, Congress and crypto will be postponed to later in the week to provide a more up-to-date read on how DC is regarding the recent crash. One thing is certain, DC is paying attention. Already had a couple of inquiries from the Hill on the matter. So all those congressmen and regulators who are pro-crypto now are probably like, what the hell just happened, right? And like I said earlier, the White House is paying attention to markets, so not only stocks, but crypto. And crypto is so big, it can certainly affect, the economy to a certain degree. So all these things are going to be watched closely, and let's see what the Fed does on Wednesday, guys. My hope is that they reverse or they slow down the raising of rates and they, put out a plan that just calms the market, saying, hey, look, we're fighting this recession stuff. We're not going to raise rates as high as possible. And then, maybe we'll start going back to QE and just putting out some messages to help people be more confident, right? However, look, they've got problems, right, with inflation and recession. So we're going to see what happens, guys. So it's going to be, once again, painful in the short term, but in the long term, I'm bullish, guys. I'm going to buy the dip where I can. And I'm not some millionaire where I'm putting, hundreds of thousands of dollars into crypto. And I'm being transparent. I'm putting and buying as much as I can. And that could be maybe one day I put a few $100 or a couple thousand or whatever it is, right? I'm being realistic with you guys. And I'm also taking it, slowly. I'm being cautiously optimistic here, and watching what certain charts, watching what some of the folks who do technical analysis are saying. So long-term bullish, short-term bearish. And look, be prepared for all possible scenarios. This thing could get worse, especially with a Celsius network potentially. I'm not saying it is, potentially going under. That will be pretty rough, guys. But man, look, one day, I should say someday soon, we're going to hit the bottom and then we'll start moving back up. It's tale as old as time, right, guys? The markets move in cycles. Don't forget that. And you got to just separate your emotions. Anyway, guys, what do you think about this? Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.